Welcome back. Today we're cutting through the hype to analyze some of the hottest trending stocks and cryptos. We'll break down names like Dragonfly Energy, Fusion Fuel Green, ALEO, Pudgy Penguins, FLR, and more. What are they? What's driving their price? And are they smart buys or just hype? If you find this valuable, hit like and subscribe for more no-nonsense market breakdowns. Let's dive in. First up, let's talk about Dragonfly Energy, ticker symbol DFLI. This is a company that's starting to get a lot of attention in the clean tech space, and for good reason. They're making advanced lithium-ion batteries designed specifically for RVs, boats, and off-grid energy systems. Basically, anywhere you need reliable, portable power away from the grid. Unlike giants like Tesla, Dragonfly is zeroed in on a niche, mobile and recreational power. This market is expanding fast thanks to the explosion of van life, remote work, and the growing popularity of off-grid living and adventure travel. The stock's been volatile, which is pretty typical for emerging tech companies trying to carve out their place in a competitive industry. Right now, investors are betting on future growth and innovation, not on current profits or established market dominance. Their push into solid-state batteries is especially exciting. If they can successfully commercialize this technology, it could be a real game-changer for the industry, offering safer, lighter, and more efficient batteries. The upside here is huge. If Dragonfly can bring new tech to market and dominate their niche, the rewards could be significant. But the risks are just as real. Competition is fierce, with both startups and established players eyeing the same space. Supply chain issues, which have hit tech and manufacturing hard in recent years, could also impact Dragonfly's ability to scale and deliver. And of course, there's always the risk that new battery tech might not deliver on its promises, or could take longer to develop than expected. This is a classic high-risk, high-reward play. Don't expect stability, quick wins, or predictable returns in the short term. If you're bullish on the future of green energy and can stomach some volatility, a small, long-term position in DFLI could make sense as part of a diversified portfolio. Don't go all in based on headlines or hype. Consider averaging and over time if you believe in their vision and want exposure to this sector. Remember, patience is key. This is a 3 to 5 year story, not a quick flip for fast profits. You'll need to be willing to wait and watch the company's progress. Only invest what you can afford to lose, and make sure it fits your risk tolerance and financial goals. DFLI is for those willing to wait and watch the green energy transition unfold, and who want to be part of the next wave of battery innovation. If you're looking for stability or steady dividends, you'll want to look elsewhere. This isn't that kind of stock. But if you're hunting for disruptor potential and want to keep an eye on emerging leaders, keep DFLI on your radar as the story develops. Next up, let's talk about Fusion Fuel Green, ticker symbol HTOO, a company aiming to revolutionize the energy sector. They're betting big on green hydrogen, using innovative solar-powered electrolyzers to produce clean, sustainable fuel from water and sunlight. Their technology could make hydrogen much more affordable and accessible. But the green hydrogen industry is still in its early days, with many hurdles ahead. Europe's aggressive green energy policies give Fusion Fuel Green a valuable head start, especially in regions like Portugal and Spain. But competition from established energy giants is fierce and growing. HTOO isn't profitable yet, and is burning through cash to fund its ambitious growth plans, so expect dilution risk, ongoing capital raises, and wild price swings. The upside? If green hydrogen adoption accelerates and HTOO's technology becomes the industry standard, the potential market could be absolutely massive, transforming the company's fortunes. The risk? It's high. Costs for green hydrogen are still well above traditional methods, and major players with deep pockets are circling the space, ready to pounce. This is a true moonshot, potentially game-changing, but extremely speculative and not for the faint of heart. HTOO is only for those with a high risk tolerance and a long-term outlook who can stomach volatility and uncertainty. If you're bullish on the future of hydrogen and want exposure to a pure play in this space, HTOO is definitely worth a closer look. But be ready for serious volatility and the very real possibility of failure. This is not a sure thing. Don't bet the farm. This stock belongs in the speculative corner of your portfolio as a small, high-risk position. Watch closely for signs of execution, new partnerships and technology breakthroughs that could shift the odds in their favor. If Fusion Fuel Green delivers on its promises, the rewards could be substantial, with high returns for early believers. But if not, be prepared to cut your losses and walk away. Risk management is key in this kind of speculative play. Shifting to crypto, ALEO is tackling blockchain privacy with zero-knowledge proofs. Unlike Bitcoin or Ethereum, ALEO keeps transactions private by default, opening doors for confidential apps and secure identity. Backed by top VCs and cryptographers, ALEO's tech is promising, but the mainnet isn't live yet. You can't buy tokens easily. Early access is mostly for technical users or private investors. The big challenge: adoption. They need developers and users to build a real ecosystem. If they succeed, ALEO could be a privacy game changer. For now, it's a watch and wait. Track their progress and be ready for volatility at launch. If you're a sophisticated investor, early involvement could pay off. For most, keep ALEO on your radar and learn the tech. Privacy is a huge narrative. ALEO could lead, but it's still early days. Don't FOMO in, wait for real traction. Pudgy penguins, NFTs turned brand phenomenon. After a rocky start, new leadership transformed them into a real-world brand, launching toys in major retailers and building a digital ecosystem. The original NFTs are pricey, but the brand's success now ties to toy sales and digital engagement. If the brand grows, NFT values could rise. If not, prices could crash. The NFT market is speculative. Buying a penguin is like buying a stake in a startup. For most, the toys are a low-risk way to get involved. If you believe NFTs can become the next Disney or Pokemon, Pudgy Penguins is a top contender. But it's high risk. Only buy the NFT if you love the community and believe in the vision. Otherwise, enjoy the brand and watch the experiment unfold. This is a case study in NFT brand building. Success isn't guaranteed. Invest with caution. FLR is building the bridges between blockchains, enabling smart contracts and data sharing across networks like Bitcoin and XRP. Their state connector and Oracle tech let developers build dApps that use data from multiple chains, unlocking new DeFi possibilities. The FLR token saw heavy selling after airdrops, but the project's long-term value depends on adoption, not hype. If you believe in a multi-chain future, FLR is a key infrastructure play. Risks, execution and security: many interoperability projects have failed or been hacked. FLR faces tough competition from Layer 0, Wormhole and others. The opportunity: if FLR delivers secure, reliable cross-chain tech, it could be undervalued now. Watch for developer traction and network growth. Ignore short-term price noise, focus on fundamentals. For patient investors, FLR is a long-term bet on blockchain connectivity. If they hit milestones, FLR could shine. If not, move on. Neon EVM lets Ethereum dApps run on Solana, combining Ethereum's developer base with Solana's speed and low fees. Developers can deploy existing Ethereum apps on Solana without rewriting code, lowering barriers and boosting innovation. If Solana keeps growing, Neon EVM could be the gateway for Ethereum's capital and users. Risks: technical complexity, potential bugs and competition from native Solana apps and Ethereum Layer 2s. Success depends on developer adoption and security. If you're bullish on Solana and multi-chain compatibility, Neon EVM is a high-risk, high-reward play. The token's value is tied to platform activity: more dApps, more demand. Watch for real usage, not just hype. If Neon EVM becomes the go-to bridge, the upside is big. If not, it could fade fast. For now, it's a speculative bet on cross-chain growth. Only invest if you understand the risks. SWELL is shaking up the world of liquid staking. Stake your ETH, receive SWETH in return, and keep earning rewards while still being able to use your assets across DeFi protocols. This means you don't have to choose between staking and participating in the broader crypto ecosystem. You can do both, maximizing your capital efficiency. Competing with giants like Lido, SWELL sets itself apart by focusing on decentralization and unique community incentives, such as pearls, which can be redeemed for future token airdrops. This approach aims to reward early adopters and foster a loyal user base, giving the community a real stake in the protocol's future. The market for liquid staking is booming as more ETH gets locked up, and protocols like SWELL are seeing rapid growth in both users and total value staked. SWELL's edge lies in its unique incentives and its strong push for decentralization, which could help it stand out in a crowded field. But there are risks: intense competition, potential smart contract vulnerabilities and the ongoing challenge of attracting users away from established players with bigger networks and deeper liquidity. The upcoming governance token could become a valuable asset for holders, or it could end up as just another farm and dump, depending on how the project evolves and how the community responds. For active DeFi users, SWELL offers not just yield, but also the potential for airdrops and other rewards, making it an attractive option for those looking to maximize returns. As a long-term investment, success will depend on SWELL's ability to capture market share and execute its strategy effectively in a rapidly evolving space. There's high potential here, but also high risk. Don't expect overnight success, and be prepared for volatility along the way. If SWELL can carve out a niche and build a dedicated community, the rewards for early participants could be significant and long-lasting. But if it fails to differentiate itself, it may simply get lost in the crowd of similar projects vying for attention. Ultimately, SWELL is only for those comfortable with DeFi risks. Watch adoption closely, and always do your own research before diving in. Stater Labs SD is building a multi-chain staking platform. Think Stripe for staking. They offer modular smart contracts, letting users and businesses stake assets across Ethereum, Polygon, BNB chain and more. Their B2B approach could drive massive growth if exchanges and fintechs adopt their infrastructure. For retail, Stater offers liquid staking tokens like MATISX, simplifying DeFi across chains. The SD token accrues value from platform fees and governance. Bull case, Stater becomes the go-to staking layer for the industry, benefiting from multi-chain growth. Risks. Every new chain adds complexity and competition from native solutions. Success depends on user experience and partner adoption. For diversified staking exposure, Stater is compelling, but volatility is high. Only invest if you believe in a multi-chain future. Execution is everything. Watch for real traction. Stater is a long-term bet on staking's growth. That's our rundown of today's trending stocks and cryptos, each with unique opportunities and risks. There's no universal answer. Your best move depends on your goals and risk tolerance. Always do your own research. Never invest more than you can afford to lose. Which asset are you most bullish on? Drop your thoughts in the comments. Thanks for watching, like, subscribe, and stay tuned for more market insights. See you in the next video.